Hello again, it's me. We know the importance of income protection and protecting ourselves and our income in the instance we're unable to work due to sickness or injury. You get a monthly payment, typically 75% of your pre-sickness income. This gets paid until you're back at work. However, all the variables associated with income protection can be very confusing and overwhelming. Have no fear, I'm here. I'll touch on a few of the main variables that you might need to look at. Number 1, who actually owns the policy? You can choose to pay for your policy out of pocket or via your superannuation fund. Paying for it out of pocket means you can potentially claim a lot back at tax time. However, cash flow might be tight. You have to consider whether you can afford to do so right now. Having your superannuation own the policy means that your super fund might be impacted due to insurance costs eating away at your super fund balance. Keep in mind that when you have a successful income protection claim, policy payouts will be paid to your super fund and not you, because your super fund is the policy owner. Number 2, waiting period. You might decide what waiting period you wish to have when you make an application. If you opted for a 30-day waiting period, you have to wait 30 days, before you qualify for your first monthly benefit, and the first payment is paid to you 30 days in arrears, which means you're essentially waiting 60 days. You have to ask yourself, do you have enough sick leave, annual leave, savings to wait 60 days? Could you actually potentially stretch that out further to make the premiums cheaper? Number 3, benefit period. So you've had an income protection claim, you're receiving your monthly benefit payments. How long do those payments last if you can't actually ever return back to work? You'll have the option at application time to choose your benefit period. If you opted for a 2-year benefit period, your payments will be cut off after 2 years even if you haven't returned to work. If you opted for a 65-year benefit period, you're covered until retirement age. Number 4, agreed or indemnity. The last thing you want to do is prove your income at the time of your insurance claim. If you opted for an agreed value cover, you show proof of income and financials when you apply for the cover, not when you make a claim. If you opted for the cheaper cover, which is indemnity, you will need to show income at the time of the claim. Here is where the issue lies. Say you're a shift worker and due to an undiscovered illness, you started to slowly work part-time leading up to your diagnosis. You might have had an income protection policy covering your full income. Your final insurance payout might end up being 75% of your part-time income because this is the income and the financials that you can show when you make a claim. I've only touched the surface here. We here at Goldtree Wealth assess your situation and the insurance providers out there to put in place a cover and an insurance structure that is right for you. And as every year ticks over, we make sure it's still appropriate. We're here to help. Connect with us today.